Hey YouTube, this is Zach with Achilles Financial. Today I'm going to talk about the covered call strategy that I'm utilizing with the 100 shares of BlackSky that I purchased today. This is a follow-up to yesterday's video where I highlighted that I was planning on entering this position. What I did today is at market open, I purchased 100 shares of BlackSky. I was able to do this at an average trade price of $9.17 a share, which is slightly higher than the price that we were looking at in yesterday's video of $8.84 a share. And the overall market today did perform very, very well. And at one point in time, we did see in active hours that BlackSky was trading as high as $9.70 a share, which is still below their SPAC price of $10 a share. Now, keep in mind that what I'm looking to do or utilize for this platform is buy for the long-term hold. Now, I currently don't see a lot of catalyst for BlackSky until they report their first earnings as a public company, notably due to the fact that right now they're still trading at a total valuation, which we can see right here, of nearly $1.1 billion. Now, that $1.1 billion that we're looking at is representative of a total value, or rather a price to sales ratio of nearly 20. So right now they are trading on total full year expected earnings or expected revenue of about $40 million, which is down. Keep in mind they also have a significant number of warrants outstanding right now where we're going to potentially see some additional volatility when it comes to true earnings numbers associated with those, due to the fact that those can change and have different liabilities depending on the price of the stock. So what I look to do today is I already have 100 shares in the long-term account. What I was looking at doing today is purchasing 100 shares, and then I immediately turned around and I sold the covered call you can see right here for $50, which gave me $50 right here that I was then able to just hold in cash in my account. What this immediately provided me is the opportunity to gain $50 off the investment, which immediately represents north of a 5% return on my initial investment. However, since the price after hours has gone as high as $9.71, you can see that I have the capability to potentially be called on those shares. So I do have that set at the November 19th, which is just a little bit more than a month out. What this could potentially represent, if my shares are called upon, I could lose my shares if they're over $10 a share, and I have a max profit in the scenario, if this were to occur, of $132.83. And you can see that in the left-hand corner of this particular graph right here. So what this means is that because I sold the call, I am setting up my shares as the collateral that is potentially associated with it. And the platform that I'm utilizing to showcase this is simply the Thinkorswim web platform from TD Ameritrade. So my thought process here is, while I am long on BlackSky, I do not really think that the company could hold a valuation greater than $10 or greater than 1.1 billion prior to them announcing earnings. If that's the case, then I'm willing to sell at $10 a share. So this potential profit or representation here means that I could have a $132 profit, which would represent a nearly 15% return on investment over the course of 1 month. At that point in time, what I'd look to do is when I sell those shares, I would then turn around and most likely look to either hold that cash on hand or wait until I see the price come back down, rinse and repeat. I would also have the capability at that point in time to sell a cash secured put, where if the shares drop back below $10, I'd be able to purchase them at that point in time and someone would pay me to do so. However, right now what I'm going to look to do is continue to hold BlackSky, continue to sell the $10 calls until I see an earnings date in sight, at which point in time I will change the strategy. Just to showcase what we're looking at from a sell perspective, right now we're looking at the November 19th at 10. You can see that those are now pricing in around $55 to $60 because each option is representative of 100 shares. However, if I wanted to go out slightly farther, such as the $15, and I wanted to go into next year where we think we may actually have the capability to really see some movement, there's still decent prices here where you can separate out that $15. And if I were to sell like so, you can see that this is representing a potential profit here of $632, which is still on an investment of $917 plus the covered call that I've already sold. However, the only risk is that the stock is going to be over my strike price of $15 a share. And at that point in time, I'd still be walking away with a very, very healthy profit of more than 70%. So if that's the case, I think that this is an appropriate strategy to evaluate some of these sub $10 post-SPAC names where, yes, there's a lot of potential for the underlying company, but there's also going to be a lot of volatility associated with it. So this is some of the trading strategies that I am utilizing, and I talk about this on both my Twitter account at Finance Achilles, as well as the Discord in the description down below. If you have any questions, feel free to ask in either of those two places or in the comment section down below. And if you found this content helpful, please leave a like and subscribe. Thanks. Talk to you later.